everyone, you're all very welcome to another market update here at the Alpha Capital Group. So in this video, we're going to, recap on the price action of last week, seeing how did the markets close, obviously on Friday. And of course, looking ahead to what is probably going to be one of the busiest weeks in the financial markets, probably in the next 3 to 6 months or so. This week, we've obviously got a number of central bank meetings. We've got a number of data events. We've got a number of very, very important earnings reports within the stock markets as well. So a lot of things happening, a lot of information coming out in the markets. And of course, we talked about that today in our own Discord as well, where we actually went through the key kind of themes, the key events and stuff in our institutional group as well. And we've obviously posted information in that regard also. So broadly speaking, obviously market dynamic is of course fairly, I suppose, choppy, as we talked about it last week. Market dynamic is going to be, again, going to have a very, very volatile and busy week, of course, of what's going to be a lot of economic data, as we said just a moment ago. So I suppose before we kind of get looking ahead and look at the charts, I suppose from a price action perspective, kind of the key themes really this week is going to be the Fed on Wednesday. Of course, we do have the ECB and the Bank of England on Thursday. And of course, the three big companies in the US, Apple, Amazon, and of course, Google, formerly known as Alphabet, are all reporting earnings on Thursday evening after the market close. So Wednesday, Thursday, two very, very, very busy days. And of course, on Friday, we round out the week of NFP. So every day, we'll be looking at doing kind of just a quick synopsis of kind of what the major themes and events are this week, obviously looking at each one in probably detail. So for example, on Thursday for the Bank of England, the ECB, and of course on Friday for the non-farm payrolls as well. And I think it's important to be recognizing of the volatility that's going to be presented. And of course, with volatility brings potential, particularly with some of the brokers and institutions, obviously slippage. Slippage is a very natural thing that happens in the markets when certain pieces of news or certain pieces of information comes out in the markets. And of course, your institutions, your algorithms, high frequency kind of algos broadly have to try and then reprice that in and into the markets. And of course, that's where slippage comes. So if you're wondering where there might be some gaps this week, it's really going to come off the back of the economic data, both obviously Wednesday and Thursday. So just kind of please be mindful of that. If you are trading maybe higher volume, tighter stops, just know that your stop loss isn't always necessarily going to be guaranteed with a lot of these exchanges, a lot of these brokerages, because of course slippage. And of course, the slippage is where the next availably quoted price is given into the markets, and that's where a lot of those positions will be entered and executed. So just please be aware of that as well. All right. So obviously tomorrow, when we look at the economic data, we have got a raft of data out through the day. So obviously looking at German retail sales, German unemployment figures. So that's obviously going to be important for the European assets, the European pairs. Now tomorrow as well, we do have data in Europe, as I said, through the course of the day, really from kind of 7 till 10. And then of course, tomorrow afternoon, we do have GDP in Canada, and we do have US data in the US as well, with the Case-Shiller Home Price Index. And of course, the consumer confidence and of course, Chicago PMIs as well. So it's going to be a very, very interesting couple of days leading into obviously Wednesday's FOMC. And of course, Wednesday's FOMC, we've got the ISMs at 3 o'clock. And of course, we have the all important FOMC, which is the Federal Open Market Committee, US, Global Central Bank for the US, obviously reporting its current projections, its current, what could we say? I suppose its current viewpoint on how the markets are obviously playing out at the minute. And it's going to look at the likes of PCE, CPI, and some of these other pieces of information as well. So Wednesday evening, come 7 o'clock, is going to be very, very important. So the interest rate, the monetary policy statement will come out at 7. And then, of course, at 7:30, Fed Chair Powell will step onto the stage. He'll give a speech, and then he'll be answering questions broadly beyond that as well. So it's going to be a busy couple of days. Tuesday starts to get busier. Wednesday, of course, Thursday and Friday as well, leading into that. So then obviously on Thursday, we'll be going through that more closely, the BOE, and the ECB broadly speaking. And as we said on Friday, we also have NFP to end the week. So we've got a lot of information, a lot of events, a lot of trading opportunities. But with trading opportunities becomes the potential for trading losses as well. And I think that's really, really, really ultra important here, regardless whether you're buying or selling in different asset classes, that you have risk management uniquely thought out, because with a lot of institutions, whether it's brokerages, whether it's exchanges, or whether it's even in the prop trading world, the majority of people who blow accounts, who overexpose themselves, are really opening the door to obviously challenges, failing evaluations, but also blowing all of the capital in the account. And no one wants that, particularly within the retail trading environment. So I suppose that's kind of where we are for the early parts of this week, just kind of watching the data, watching the price action closely, because of course that is going to affect market sentiment, broadly speaking, particularly from, let's say, the really short-term scalpers, as I said, high frequency algos as well. So it's going to be an interesting couple of days in the broader markets. Now, if we take it back to price action, as I said, kind of the first thing we're kind of focusing on today is that kind of dollar assimilation and price action has been very kind of back and forth really since the tail end of the week before early last week, where the DXY has literally just been back and forth in around this 102 level, and it's just in a holding pattern. We're seeing it a lot in the FX pairs, euro, cable, which we'll look at now in a second, even gold predominantly in the last week or so. More specifically the tail end of last week, we've seen a lot of consolidation. And of course, markets from an institutional perspective, from I suppose a higher volume perspective, no one's kind of getting too kind of hung up in terms of the directional bias on Wednesday, because of course they're not looking to get kind of too ahead of themselves, because of course if they hedge on a particular side and of course sentiment goes the other way, then they're going to be carrying additional exposure on the books, and that's ultimately kind of what generally happens into these kind of awaited high volatile events. You tend to see markets being relatively flat and fairly subdued, kind of in shorter, tighter ranges. And that's effectively what we're seeing in a lot of asset classes broadly today, and obviously the tail end of last week. Now, when we look at euro dollar, we have seen euro dollar trend, as we talked about, continue to tick up higher. We have come all the way up into this area here, as we said last week, around 109. You can even see it here if we draw it out, very, very structurally speaking, very, very prominent key price action level. But of course, all we're really doing is just creating bullish order flow into what's been a very, very heavily sought out bearish trend really through 2021, and of course into 2022, the back end of 2022, when we had this bottom way back in October and November. Now, since then, we have seen markets, particularly in the last week or so, come up to this 109 level, has become very choppy, very up and down. You can kind of see it yourself in the daily. Of course, you can see it on the 4 hour as well. Very choppy, very consolidationary as things stand. So we've gone from a very, very aggressive move off of the NFP and of course off of the CPI into now kind of nearly a flat bed of consolidation, as I said, into Wednesday's FOMC. And that's really kind of where the markets are at the minute, not getting too ahead of themselves, pricing in current circumstances. But of course, there is very much the element for this to go higher. But I think at this point in time, really, the next move within euro dollar is going to be brought about this region here. Are we going to break structure to the downside and make new kind of short-term intermittent lows? Or are we actually going to ultimately progress through it, further upside progression in the likes of some of those indices? And then, of course, seeing that kind of momentum kind of tick higher. And I suppose that's going to be the big important point, as I said, when it comes to Wednesday's price action. So, of course, in cable as well, very, very similar scenario. You look at cable short-term highs from December. It's been at this flatbed around 124, 124.50. And of course, we've got back into it over the last kind of couple of weeks or so. And over the last week, price action's been very much back and forth at this key kind of 124, 124.50 level. And of course, if we look at a daily chart, you can even see that kind of daily M-shaped top is trying to form now. And even within this right leg, you can see another potential secondary top in terms of the internal structure as well and price action. So it's really going to be important now this week to see, are we going to get a catalyst? Are we going to get a clear rejection? And if so, are we going to start to get a mitigation against some of this very, very aggressive buy-in that we saw in the cable from, I suppose, the NFP at the beginning of the month? Now, of course, that'll symbolize a little bit of profit taking, but at this point in time, it's really all eyes to see how does the dollar perform this week. And of course, with that, the markets broadly. Now, moving across the dollar yen. Interestingly enough, dollar yen, after the Japanese CPI and obviously the interest rate meeting just in terms of mid-January, yen has now started to kind of move a little bit laterally. So there's a little bit of a pause. We had consecutive kind of breaks of structure, consecutive clear trending price action to the downside. And of course, you can see that on the upside. And of course, since then, we are actually seeing, as again, into the last week or so, very, very clear consolidationary price action. You can even see it here. If we draw imaginary line, 129s is holding as a fairly short-term support for dollar yen, while the price actions remaining very much underneath this kind of 130.50, 131 level as well. So of course, if we do take out 131s, you're really looking for that elongated continuation all the way above into kind of 132s, maybe even as high as 133s, depending on how clean the liquidity sweep is. But at this moment in time, very, very clear bearish trend, very much intact, very, very clear in that regard. But now it's just a case of seeing what's going to be the next phase of price action, because as we said, price action now has been fairly consolidationary in this highlighted region down here. And that's effectively kind of where we are currently on dollar yen. Now, of course, last in the FX space tonight is obviously dollar CAD. Structurally speaking, we did obviously have data last week. We had initial weakness off the BOJ, but that very, very quickly eroded, actually, as you'll see. And of course, we had this kind of 133.50 flatbed kind of daily support. And of course, on Thursday, the markets did break through and obviously close lower to end last week. Now, we did close above 133s. Now, today, of course, what have we seen? Well, if we look at the 4-hour price action, isolate the price action from this consolidationary structure, clear impulse to the upside, very, very clear change of character, but also kind of a short-term break of structure into this kind of 133s. Price action is flagging up currently back up into this kind of 133.80, 134 level here. And I think this is going to be a prominent area to see if there is any sort of reaction, given that the price action has technically taken out this, I suppose, support area here. And we've obviously made new short-term lows, as I said, at 133. It'll be interesting to see if there is any sort of reaction in this region here for potential continuation to the downside. And I think that's going to be the catalyst. That's going to be the big narrative potentially posed by Wednesday. And of course, if that was to happen, you would probably see that weaker dollar across the board. So you're seeing probably potential euro dollar rise, cable rise off the back of potential weaker dollar as well. So that's kind of a narrative kind of to keep an eye out on here, particularly in dollar CAD as well. Now, moving across to indices, as we said, now this is where things are really starting to get interesting, because of course last week we mentioned the fact on the daily and the weekly charts. If we just go for a second, go full screen, you can see it there, very, very clear 2-year consolidation, particularly on the weekly charts. Very, very clear downside break out of this structured area here above 1685, 1700s. And of course, short-term bottoms came in here very, very nicely around 1615, 1620. Now, since that, we've had that very, very clear return all the way back up into 1947. And of course, what happened last week? We got the return to 1947. Very, very clear weekly order block rejection. And we have since seen the markets ultimately erode back into this region. So that's then bringing in your daily, your 4-hour charts, where over the last 4 or 5 days or so, we've had that very, very clear bullish scenario, very, very clear weekly mitigation on the order blocks back into this kind of 1920 level here. And of course, that's where the price action has been holding, should I say, into last week, where the price action now is holding this short-term structure here. So really now it's a case of, given we've mitigated on the weekly, given that we've clear bullish order flow, higher highs, higher lows continuously, we're really looking to see now, is there a break of structure? Is there a downside break of structure here? Because of course we know, particularly if you go back to the CPI data, and of course the NFP from the 6th of January here and here, these two events, we've seen some very, very aggressive moves in gold. So naturally enough, we're expecting something on Wednesday from gold. Now, whether that's starting to be a little bit of take profit from that kind of 3-month trend in bullish gold prices and more back into modest levels down here, like around 1850, 1870, that becomes, I suppose, the big question. But of course, here at this moment in time, 1920s is holding as a fairly nice short-term area of price action. And of course, really then we're looking to see what is the next break in price action and see which way does the structure move towards. I think that's going to be really, really important. But at this moment in time, gold has become very, very consolidated and very choppy up here between 1920 and just underneath this 1950 level, broadly speaking. So now that we've kind of looked at some of the indices or some of the FX pairs and obviously now gold, let's look at the indices as well. Now, indices has continued to churn higher. So that's the first thing you'll see really into last week's close. Very, very nice pump higher again. New highs again for January, of course, in the S&P. In the Nasdaq, we saw the same situation. Of course, if we just go up to the hourly or the 4-hour charts, you'll see that pretty clearly. And of course, on the Nasdaq as well, you'll also see that the price action did temporarily, even though if it's on a wick, it did temporarily break the highs set in December before rolling back over again. Now, we've seen a very, very clear bullish trend, higher highs, higher lows, higher highs, higher lows, new higher highs at the tail end of last week. And we've actually seen a little bit of a gap down in the markets today on the cash prices, but broadly speaking, since then, markets has been a little bit correctionary back into this 11,850 11,900 level. Now, similar again scenario in the S&Ps, very clear bullish order flow from the 6th of January NFP impulse. So of course we had 6th of January NFP. We had a little bit of a correction back into the middle of the month. Very clear mitigation here. Higher highs, higher lows forming, new short-term highs, new higher lows, and new higher highs again. However, we have yet to take out that, or yet to close above that 4,100 level, which was the area in which we sold off from December's CPI. However, at this moment in time, clear strong closure on Friday in the indices, a little bit of selling coming back in today. I don't know whether that's a trap move or what it is, but of course, let's just wait and see, because of course, at this moment in time, the order flow is still very much bullish. Now, seen here as well, breaks structure continuing to play out both on the internal structure and in terms of the wider moves as well. Recent lows forming here, and of course that nice little run up, of course, into Friday's closure and back down to this local area of liquidity down here. So 40.30 to 40.10 I think is going to be really interesting now into obviously FOMC on Wednesday, and seeing if there is any sort of reaction back up into 4100s, or whether we ultimately implode and try to invalidate this bullish trend that we've seen emerge over the last kind of 3.5 weeks or so within the price action. And that narrative, it goes across the board for the S&Ps, the Nasdaq, and of course the Dow Jones, which we're going to finish on looking at now. Now again, similar scenario, Dow Jones, very clear bullish moves, obviously into Friday's close. We've seen a little bit of a pullback between Asia session and of course through the early parts of London. However, the US markets has seen a little bit of a modest recovery into today's close and coming back up here into this 34,000, which it did reject. So that's kind of initial move here. We've obviously short-term tops, a little bit of a rejection here, comes back, double tap into this area here. As I said, just underneath 34,000, and the markets has sold off again. So really, I suppose now, if you're looking for bullish Dow Jones, you're looking for bullish indices, you're really looking for Dow Jones above 34,000. You're really looking for the Nasdaq to see some sort of bounce here around 12,000. And then, of course, as I said, in the S&Ps, breaking or rejecting and holding firmly above this 4035 level, 4030 level, for that secondary phase of bullish price action back into these local highs, as I said, around 4100. So that becomes interesting territory for traders to watch, as I said, into obviously Wednesday's data. Now, of course, if we look at the DAX very quickly, the DAX has become very choppy. Now, of course, let me just tidy this up for a second. You'll see DAX become very choppy, as I said, between 15,000, 15,200. Looking at that broadly, you can kind of see it here as well. We had the initial peak last week. Last bit of buying came in was just a 15,191. I say keep an eye on that region around 15,200 last week to see if there's any sort of rejections. And we have rejected it a number of times, but we've also held this 15,000. And now we're really effectively seeing the Dow Jones formally move into the DAX in terms of consolidation. So the DAX at the moment, as I said, is very much range bound between obviously the 15,000 and this 15,200. So really looking to see, can we take out these structural highs and continue pushing on, or are we going to get a further rejection, potential break through 15,000? But in either scenario, this break of range is going to be very important. Give us the next directional bias here in these European indices as well. And of course, brings us to the Euro Stoxx again, which had that secondary peak move into 41.75, 41.80. We talked about the tail end of last week. Very clear initial rejection, obviously gap lower today. We have seen a little bit of a bounce temporarily from 41.20, but if you look at the broader perspective, a little bit of an M-shaped top now looks to start to be creeping in just below this 4,200 level. I think that was going to be an interesting narrative to see where we're going to break through 4,200. Now, we are creating tops at the minute. We are creating downside wicks. So markets aren't getting sucked into the selling just yet. And I think you're going to see a little bit of a pause, but really looking for another reaction from obviously markets Wednesday and Thursday to give us the next directional phase in price action. And that really rounds it off with the FTSE. So of course, the FTSE we talked about last week, 78.40, 78.50s prompt highs, break back under this weekly level here, which we did. And obviously we had that kind of flag or kind of that bull trap back into 78.15s on the weekly. Clear lower lows formed in terms of the break of structure. And of course, last week we had pause with a gap down this morning. And of course, we did hold these bottoms structurally at 77.20 before the markets has rallied all the way back up into this region. So really this region here, 7,800, I think 78.15 is going to be important this week to see if there is any sort of reaction, because even here in the FTSE, very choppy price action here at this daily level here, as I said, around 7,800. So 7,800 is going to be important. Really looking to see if there is that kind of clear reaction, clear rejection from 7800s to bring us back down into some of these more modest levels, to undo some of the price action, undo some of the mitigation and bullish market dynamic that we've been seeing kind of develop through the end of December, as I said, more poignantly through the early parts of January as well. All right, so that's where market are currently set as we begin this week. I suppose really now it's just a case of watching and observing the price action for the busy couple of days that's coming out, of course, naturally enough, and of course just setting the tone for the rest of the week. So we will be kind of taking another look really at Fed on Wednesday, of course Bank of England and ECB on Thursday, and then obviously wrapping out the week after the earnings on Thursday night, and of course NFP on Friday as well. Have a great week, everyone. Trade safe. Take care.